after it's over. Okay, so good morning, everybody. John Harris here, managing partner with Fortune Management. I've got my partner here, Reagan Hartman, and also one of our colleagues in the accounting space, Mr. Lee Pennington. Is a phenomenal dental CPA out of Atlanta, Georgia, works with a lot of our clients around the Southeast. And just a quick disclaimer, ran into an issue this morning getting this uploaded to Facebook Live. And so unfortunately, I apologize for the inconvenience. We're not able to broadcast this live. But as soon as we're done with this conversation, I'll have the video downloaded. I'll get it uploaded to Facebook, and I'll also get it uploaded to our YouTube channel. If you've got any questions, if you see the video on Facebook, you've got questions, feel free to type in the comment section. I'll get the notifications. We'll field those incoming questions and make sure that you get the answers that you're looking for. And then, as always, feel free to DM us. I'll tag Lee and I'll tag Reagan. You're welcome to send us direct messages or comments in the feed itself, and we'll be sure to field those questions. And then, obviously, if you're on the webinar itself with us today, feel free to type any questions that you got into the chat box. Can we chat questions? You like this one? You absolutely can. So any questions that you got, just type those into the chat box, and I'll keep an eye on those, and we'll make sure we get those questions answered as well. So with all that said, as a long disclaimer, good morning. How you guys doing?
Good. How are you?
A lot going on. That's how I'm doing. I got so much going on. I got 2 cups of coffee here. Damn. We got it covered. And I got one of Lee's favorites. You know who that is, don't you?
No,
Ashley
sure.
Hill.
Oh, okay.
That's their new.
Okay.
That's her new
I
logo.
recognize the logo. Yeah.
That's her new logo. Athens Dental Associates down in Athens. Yep, she's ready to go. But good. So obviously, there's a lot of stuff has come up over the last couple of days. A lot of changes. A lot of new information came out. A lot of good stuff, in my opinion. I tried to catch as much of the HR for Health webinar that they did yesterday as I could, and then obviously I was on our corporate call. Reagan and I were trying to divide and conquer. So she took one, I took the other, and then let me get somebody. Okay, I've got to keep an eye on that. But yeah, so a lot of good information coming up. So I've got, Lee, if you want to just kind of give us a rundown of just kind of 30,000 foot, what you see taking place, and then Reagan and I are going to start riddling you with questions.
Okay. All right. So we've got a lot of different things that have happened over the last 10, 12 days, obviously. And things are changing around the country. I understand Florida's in a total lockdown as of today. They're not letting anybody in or out of the country or in and out of the state. I'm sorry. So a lot of things are happening. Of course, from our perspective, what's happening to our businesses and with our employees and so forth is what we're focusing on here. So unemployment has changed a lot. We've got 2 federal acts that have been passed. The Emergency Coronavirus Response Act and the CARES Act, as it's being called, which is the most recent one, which is probably going to generate most of the questions for today. We covered a lot of the other 2 things last week in our meeting, but I'm happy to go back and review any of those things. But primarily employers in most states, there is an emergency unemployment, partial unemployment and full unemployment for your employees. In the state of Georgia, we're required to file on behalf of the employees. I'm sure there are similar issues in other states where you report the hours or the amount that they've been paid if you are continuing to pay employees so that they will get a partial unemployment. The new act that was passed on Friday extends unemployment for an additional 13 weeks. And it also adds $600 of benefit to that for that period of time. So employees should do pretty well on the unemployment. In fact, most of them will make at least what they're making working, collecting unemployment during this time. So that's,
So Lee, really quick, a clarification I want to make, and this is for the employers and the employees, because I know this has come up. when an employee files for unemployment, if they were making less than the standard unemployment amount, they will not make the entirety of that additional 600. Is that right? It's
That's
going to be
it's not to pay them more to stay at home than it would be, is my understanding. So they would make up to what they are making for working is the way I read it. Now, there has been
and is
some
it
other
up to,
interpretation.
yeah, so is
They
that,
would
and
be,
again, I don't want to interrupt. I want to make sure that we get total clarification here. So when we say up to what they were making, is it up to 100%? Is it up to 75%? Is there, I mean, what, just so we're clear.
yeah, the way the states do it, and particularly in Georgia, and there are little twists in each state, but basically the way the state of Georgia, and again, most states are doing it in a similar method. They will look at the last 4 quarters of reported earnings. They will take the 2 highest quarters of those, and they will average out what you make per week based on that. And that's the benefit that you're eligible to receive. Previously, again, in the state of Georgia, the maximum amount that you could collect on unemployment was $330. With the addition of the 600, that increased it up to $930. But if you were making $800 a week, I think you will be limited to making $800 a week on unemployment.
Okay. And how does that apply with partial and full time? I know on the HR for Health webinar, I believe it was yesterday, they classified full time as defined as 40 hours per work week.
Mm-hmm.
So most dental practices are 8 hours a day, 4 days a week, which would be 32 hours.
Yeah.
How does that apply for part full time, and how does it apply for like partial layoff?
Okay. So again, the way unemployment is calculated is they take your previous 4 quarters of reported earnings and they calculate the average based on the 2 highest quarters that are there. So if you're on salary and it was the same fixed amount, it wouldn't matter. It would be the same whichever quarter it was. But for an hourly worker, they may have worked more hours in one quarter than another, and it will be based on the 2 highest quarters. For partial unemployment, what we're required as employers to do is report any hours that they're paid. So if they came in and worked an emergency case or 2 and worked 10 hours in a week, we would report that we paid them for the 10 hours. If their average pay is then calculated by you report the amount that they would have been paid, that is compared to what their average pay is by the state, and they would get unemployment for the difference in the 2.
Okay. Now, when we talk about the pay itself, so several of our clients, they have team members that are making bonuses. Okay. They run those bonuses, obviously through payroll. They go ahead and make the payroll tax. Right. When we're looking at those 4 quarters to get the 2 highest quarters and take that average, which for some of our clients is great because we know at least one of those months, probably, 4 times, there's going to be an abnormal payroll where they had 3 payroll cycles instead of 2, right? So, but when they're calculating that payroll, if they ran their team's bonus dollars through payroll and paid, took the withholding and all of that, would that be included in the payroll number that they're looking at?
Yes, absolutely, because the employer is required to report all wages paid as a part of the unemployment compensation. So an employer in each state has a maximum amount that they have to contribute to for unemployment. In the state of Georgia, it's $9,500. So the first $9,500 that an employee earns goes into what the wages paid that the employer would pay taxes on. However, the employer is required to report all wages for the entire year. So if you made $40,000 on salary and it was $10,000 each quarter, it would be that. If you got a bonus at the end of the year for $5,000, you would see 3 quarters at $10,000, and the 4th quarter would be at $15,000. So then they would take 15 and 10 to average that out for the unemployment benefit computation.
So either way, if their team's making, let's say a team member's making $40,000 a year on salary, but throughout the year, and our clients pay bonuses monthly. So throughout the year, the team member made an additional $9,000 in bonus. then the wages that are showing up is the 49,000, and they're going to look at which months they bonus more or whatever. Bottom,
Absolutely.
but that was my question. That came
Yeah.
up during a call with a client yesterday, and I thought, that's a good one. I don't know. So bonus dollars would be included.
Absolutely.
Does it also include, and based on what you're telling me, it sounds like it would it also include vacation and sick pay that was paid out during the quarters that they're looking at?
Yes, absolutely.
Okay.
Yeah,
Would it
all
include
compensation
any,
is reported to the State Department of Labor.
okay, and then last question on this one, and I'm sorry, these are just, would it also include any retirement contribution?
No.
Okay.
It does
I
not
didn't
include
think so,
retirement
but,
because that's not taxable wages to them at that point.
okay. Perfect. Perfect. And then last point of clarity on this particular topic, when we're looking at payroll and the wages that they are claiming for those 4 quarters, that includes, if I understand, 941 taxes, or I'm sorry, W-2 wages, but it would also
Right.
include wages paid to 1099 contractors up to no more than, $100,000 for that year.
That's a little bit different. That's getting over into the act that was just passed and the CARES Act for what an associate or anyone that's on a 1099 basis can apply for loans in that. That's where the $100,000 issue is at. So for current, what we're understanding is now the business owner is eligible for unemployment as well. So the dentist can put their wages in there. They've always had to pay based on their wages into unemployment, but up until now, they've not been able to collect on that. So what we're being told now is under the new provisions of what's going on and because of what the economy is doing, and this is a stimulus act to help everybody, the owner of the business is also eligible for the unemployment. An associate that's on a 1099 that would not have historically paid into unemployment can file and probably get some benefit from state to state. It may be a little bit different, but they can do that as well.
Now, is the owner eligible for unemployment only in the event that they're paying themselves on a W-2 out of the practice, or what if they're taking just?
Yeah, it would have to be on the W-2. Exactly. Yeah.
Okay, so if they're taking,
or if they are a sole proprietor, they would be considered the same as a independent sole proprietor, as a independent contractor would be working for them. In Georgia, at least, they can apply for unemployment and probably get some benefit from that as well.
Okay, so would it make, and I don't want to muddy the waters here, would it make more sense for an associate dentist to apply for unemployment if they're a sole proprietor? They don't have an S corp set up, but it's just John Harris DDS doing dentistry. If the associate is a sole proprietor, would it make more sense for them to file unemployment, or would it make more sense for them to apply for the PPP grant?
Okay, good question. And there's a lot of issues around that. So as we understand it right now, kind of crossing over into the other area here, from the unemployment standpoint, it makes 100% sense to go ahead and file for that in the immediate time period. Now, the PPP loan will compensate you for continuing to keep everybody on payroll. At that point in time, the employer or the business is paying the employee their full amount, so they would no longer be on unemployment at that point in time because the employer is now paying them. So you apply for the PPP, and it allows you to get 8 weeks plus 25%. So in essence, 10 weeks of pay that you can apply for, and then you would have to cover those people on their wages in order to have that amount forgiven. So that's kind of two separate issues related to each other, but they do one take precedence over the other if you start paying the employees from money you receive from the PPP program.
Okay, so you would advise the associate dentist to file for unemployment in the immediate term.
Yeah.
And then if they also apply for the PPP grant and they get they get, compensated through the PPP grant because they were paid through unemployment. The money that they received to pay themselves through the grant would be non-forgivable. And then also if the owner of the practice, because they've already been paid through unemployment, and then if the owner of the practice files for them or includes them in their calculation on the PPP grant, and they pay them through the PPP grant, how would that?
Well, the associate dentist would not, if he was on a 1099, wouldn't qualify under the PPP
Okay.
for the dental practice.
Okay.
That would just be for the dental practices employees that are on W-2s.
Okay. Okay.
Now, the economic disaster loan that they can apply for could probably pay that, could be used to pay that associate for work that they're actually doing in the practice. So there are two separate issues, and you got to be careful with the two loans that are out there. The PPP and the EIDL loan, you can't duplicate what you're using the two funds for. So you have to kind of keep that separate and be clear what you're using the EIDL money to pay for versus what the PPP pays for.
Right.
So the PPP, again, you can apply for that based on the wages that you would normally pay, and that will be a calculation that will be made. Then you can add to that your rent or your mortgage payment, your utilities, and in certain cases, interest on loans that were incurred before February 15th of 2000.
Is that the EIDL?
That's the PPP.
Okay. Is it the mortgage payment itself, or is it the interest on mortgage?
It's the interest on the mortgage.
Okay. But if you're renting the real estate, then you could put your full rent in there.
You can put the full rent in there. That's
Okay.
correct.
Okay. A couple of questions in the chat comments here. Will the $600 be retrospective if paid? If it's not, will the $600 be retrospective paid if it's not being distributed in a few weeks? So yes, as I understand it, that PPP grant is retrospective. So you can go back in time and use that money to pay for payroll all the way back to February 15th.
Yes.
Or they're asking about the $600.
The $600 will, when it goes into
Yeah.
effect, which I believe is next week, one day is when that law actually goes into effect. So that will add to it from that point going forward. It will not be retroactively paid.
Right. Okay. I think that's the question. All right. And then does the PPP program cover payroll going forward only after loan funding? No. Let me make sure I read the whole question. First 8 weeks after we pick back up, sorry, is PPP payroll costs we pay employees while we're closed, or for payroll once we start back up? So as I understand it, the PPP program is retroactive. So you can go all the way back to February 15th. To that money is, if you use the money to pay payroll back to February 15th, that is forgivable. And for the next 8 weeks, including this week, if I'm not mistaken. I don't know.
It is most likely, I think the practical application of that is it's going to be going forward, because you're going to get the money for 8 weeks. And the point of it is to employ those people at full cost. So if they've been reimbursed, if they've collected unemployment, you won't want to go back and pay them, because then they've collected unemployment inappropriately.
Right.
So the point of it is you take them off of unemployment. If they've been laid off, you're basically rehiring them or reactivating them into full employment for the 8 weeks going forward. And that's what will be forgivable. So there's an issue with, if you've laid them off temporarily or laid them off and then you hire, they come back to work, as long as you do that for the 8-week period going forward, that's where the forgiveness comes in, so that you can have that piece of that turned into a grant that you do not have to repay.
Gotcha. Okay.
Now, with that, I have a couple of questions respective to that. The first one is, one of the things that showed up on the webinars I watched yesterday was that, and something that came up this morning, was the 8 weeks or whatever that PPP loan is to cover that 8 weeks of wages, that those monies must also be spent within the next 8 weeks in order to qualify for forgiveness. Is that true?
I think it's 10 weeks. because you
Can,
get 8 weeks plus the 2.5 plus 25%. So I think that it has to be spent on this designated purpose of those things to be forgiven, which would
okay.
include those items of payroll, the payroll related cost of health insurance benefits, if those are being paid for, retirement benefits, if they're being paid for, would be recoverable through that, along with the rent and the utilities and interest.
Okay. And again, right now, just so everyone's clear, in this particular moment, we're talking about the PPP loan. A few minutes ago, he reviewed some items around the whole unemployment situation and who should be filing and how that calculation is going to be done for your team members' understanding, and then also for yours. So with the PPP, again, that loan will be forgivable if you spend those monies on wages, rent, interest on your mortgage, utilities, interest on loans that were that had been financed prior to 2/15.
Mm-hmm.
Okay. And that wages includes W-2 wages inclusive of sick pay, vacation pay, and any bonus dollars earned during the 4 quarters of 2019.
Correct.
Okay. Wages for the PPP does not include 1099. Now, this is different from what has shown up on a couple of other calls. So that's why I want to be clear. Our clients are watching all of these, and when there's conflicting information, then they're just as confused as they were before they watched any of it. And so, again, this is the PPP. We're going to get to the EIDL in a minute. But for the PPP would not cover 1099 wages paid to either the owner or associates that you have hired. Is that,
That's my
am I
understanding.
understanding that wrong?
That's correct. Yeah.
Okay. Okay. Any other questions on the PPP, John?
Yeah, there's a couple here. It never ceases to amaze me how many different variations of issues you have that fall up.
That's what happens when things are so new and it takes a little time to work it all out.
It's like, you're on. I got all the questions. I got everything I need to know about this thing. I understand it inside and out. And somebody asks this question. It's like, I have no idea.
Okay.
So, if an employee who will have unpaid maternity leave May 1st through June 15th, will that affect their eligibility for forgiveness?
If it was scheduled, say again, John.
Sounds like it's scheduled unpaid maternity leave May 1st through June 15th. Will that hurt their forgiveness? My understanding would be no, it wouldn't touch your forgiveness because they're not going to be receiving monies from the PPP.
Well, I would have a little different twist on that, quite
Okay.
because there is what's called a look back period related to this whole thing. And what the look back period is looking at is, were your wages during that period of time equal to what they were on the average of 2 periods of time? So you can choose whichever one works best for you. So the choice that you can look at for the look back period is January 1st of 2020 through February 29th of 2020. That's one look back period. So if that wages is equal to that, then you can get the forgiveness of those wages of that grant. You also have another period of time that you can go back and look at, and I think that is a date in 2019, and it escapes me. I want to say it's June through October or September that you can take the average of that. You have the choice when you have to certify what you've paid of choosing the one that works best for you in that look back period. So if someone earned income in those periods of time, and then they did not earn income in the second period of time while you had the PPP program in effect, that could penalize you from the forgiveness standpoint. So there could be a little bit of an issue with that.
Okay. So there will be no way to get coverage for the owner on the PPP program if they're being paid through owner distributions. The only way they would have forgivable coverage under PPP is if they were paid on a W-2.
That would go into the calculation of the amount that they would be eligible to receive would be on the W-2. So if they're not included in the W-2s, when the amounts are calculated on the average of what they would get paid, then they would not receive those funds to begin with.
Okay, so the
It's going to
owner,
be a part, you have to remember, it's going to take your last year, average those wages for what they would be for 8 weeks, add 25% to that, and that's the piece that you would be eligible to receive under the PPP. So if you were not included in that, if you didn't have W-2 wages, you're not going to be included in that calculation.
okay. Does the PPP cover the employer or associates who make more than 100K? No, unless
It limits them to $100,000. So
Yeah.
basically $8,333 per month.
right.
On a
Only,
W-2.
only if they were on a W-2. So if they're
That's
not on a
correct.
W-2, they're not even included in the PPP. If
That's
they are on a
correct.
W-2, it caps at 100,000.
That's correct.
Okay. If my employees are on partial unemployment, how can you apply the PPP loan in order to make sure you're getting a grant and also that you are not inappropriately claiming unemployment? So I think we addressed that earlier in the conversation. Perhaps this individual missed that portion. But yeah, as far as can you run through that one more time as far as partial unemployment? So it sounds like they've got them on unemployment, but they're bringing them in maybe to help see emergencies.
Yeah. So if they're coming in and they're working 10 hours and they normally would work 40, you report that they worked 10 and what they got paid for. The state will then calculate what they would be eligible for partial unemployment based on what they did not receive, and the state would pay them that difference. I think is that the question, John?
I believe so. I believe
Yeah.
so. So it's in other words, is it gonna is if somebody's on partial unemployment, which means they're getting unemployment benefits and you're allocating some money through the PPP to pay them, there's no double dipping. So if you pay them, they report that income each week.
The purpose of the PPP is to put them back on full employment.
Right.
Whether they're working or not, they're getting paid under the PPP. So once they go on the PPP, you're supposed to be paying them what they're earning. So as long as you're doing that, they would no longer be on unemployment at that point in time.
Gotcha. So it's not a unemployment set, like from what I understand, they report their hours worked and income each week.
Right.
So basically what they're not going to do is they're not going to say, okay, well, we're paying you $1,000 on unemployment and you generated $250 through working last week. So we're only going to pay you $750 this week.
Mm-hmm.
Is that how it works? Or they say, oh, you're making money, so we're not paying you more.
No, it's not you're making money, we're not paying you. It's that you're not working, you're not making what you normally would make. So there's the difference between what you've made and what you should have made is what unemployment, the partial unemployment is compensated.
Okay. All right. I think that got covered.
One question that I have in front of me says, what if a team member works 4 days a week in the office, but 1 day a week somewhere else? They've been laid off from the office, which was their primary source of income, but they still have employment at their 1 day a week job. Can they still file for unemployment since they lost their primary income source?
Yeah. So the issue becomes a little bit there. Should be having, both employers would be reporting their earnings to the state unemployment labor board. So again, they will be looking at what they've earned. Both employers would be reporting what they're paid. In the case of the dental office, they would be reporting that they've earned nothing for that week. In the case of the other employer, they would be reporting that they earned, I don't know, let's just say $200 a day. So the state will look at, again, what they've earned versus what they would have earned, and they would combine those two employers to calculate the average of what their pay would have been. And then they would get reimbursed a partial unemployment based on the two of those added together.
Okay. And when this team member goes to file for her unemployment or whatever, this is in the state of North Carolina, if this team member goes and files for her unemployment, is there any documentation that she needs to have that will, like a letter from her employers, her primary employer? Is there any additional documentation so it lets them know she's not trying to cheat the system, she's not taking advantage, she's just trying to replace her primary income source?
No, totally. I can't answer the specifics of North Carolina because we don't do North Carolina unemployment. But as I understand it, pretty much across the board, the states are waiving the termination paperwork, all of those kind of things. It's put on the emphasis of the employer reporting. So the employer is saying, we're basically certifying that this person normally worked for us. They didn't work for us at all, or they worked for us 1/3 of their time or 1/4 of their time or whatever. So at least in Georgia, I can say that would not be required. And again, both employers, in the case of what you're talking about, should be reporting those wages that she's earned or did not earn to the state.
And I want to,
Yes.
so a couple here, and I want to make sure we answered this gentleman's question. This is the one that says, if my employees are on partial unemployment. I think I misinterpreted the question. How can I apply for the PPP loan in order to make sure I'm getting a grant and not inappropriately claiming unemployment? So you would apply for the PPP loan just as if you would regardless of unemployment, because the intention is to get them off of unemployment and to be compensated through PPP.
That's right.
So
And
you would look at there. You would
the
look at
purpose is to get them off of
paycheck.
unemployment and get them to full pay, and you're paying that, and then that gets forgiven to you as the employer if you use the funds for the specified purpose.
And here's something else.
You stop unemployment at the point in time where you're fully paying them. You're reporting to the state unemployment at that point in time that, hey, my employee is earning their full pay.
Right. And here's a scenario that pops up. I'm a dental assistant. I'm making just as much sitting on the couch as I would if you were to bring me back in and have me work on insurance claims and pay me my income. So to each their own. I don't want to get into that conversation.
Yeah.
But the bottom line is, if I had calculated into my PPP the cost of that dental assistant, and she's not going to come back in and work on dental insurance or Facebook posts or whatever, she's going to stay home while we're shut down. I've now requested more than the amount of money that I'm going to spend on forgivable expenses. And that amount that does not get spent on qualified forgivable expenses, which again are employee payroll, mortgage interest, utilities, rent, that amount would then roll over into a 10-year loan at 4%.
That's correct.
Okay.
That's correct. So at a point in time after you receive the money and the time period is spent, the 8 weeks, you do have to certify, and that's a self-certification through payroll reports, expense receipts, et cetera, what you spent the money for. And once you've done that, anything that's determined to be in excess of what's forgivable turns into a loan, just like you said, and it's amortized over 10 years.
Gotcha.
At some rate less than 4%.
Good. So a couple good questions here. I have multiple dental offices with separate EIN numbers. Do we apply separately for each office? What about MSO? What about MSO management companies with separate EIN numbers? I would say, yeah, that should be separate.
Actually, there is some affiliated ownership rules that are being applied to this. And so that could prevent some things from happening. So if you're drawing $100,000 from multiple EINs, that's not going to cover you, as I understand it, because of the common ownership between practices. So the intent is not to, you can't violate that issue. There's probably some more specifics into that we need to dig a little bit deeper into. In most of our clients we're looking at today don't have multiple EINs, and so we didn't really spend a lot of time looking at that for the purposes of today. But you should be precautioned that you can't do that. In fact, I read some stuff yesterday that doesn't really too much apply here, but I guess it could to a DSO, that if there's multiple things affiliated, there are definitely some restrictions on how you get money from the PPP plan, for sure.
So in
So
that,
that would take a much deeper dive into the law to understand that. So you need to be, everybody needs to be cautioned on that if you have that situation.
Okay, so the answer is to file one time and include all 5 locations, payroll, utilities, mortgage.
That's my understanding.
Into
Yes.
one PPP program.
Yes,
Okay.
that's correct.
Okay. I have, let's see here. I have 2 employees that chose to stay home. I think this is what we just talked about. I have 2 employees that chose to stay home that I did not tell to stay home and who are not sick. Do I report them for unemployment? So should they file for unemployment? And they've heard some conflicting evidence, some conflicting information on this. So, absolutely, at least in the immediate term, file for unemployment. If you pay them, you're going to calculate your PPP regardless of who's working and who's not working, right? I'm going to get the full.
That's going to be calculated on historical numbers,
right?
What they're doing.
Okay.
And the PPP does not require them to actually come back to work.
Right.
It just requires that you pay them at that
Correct.
point in time.
Now, if
some of the conflict, I think, John, that's coming from that is under the Emergency Coronavirus Response Act, if an employee decided to stay home, they would not be covered under those family leave things. If they decided to stay home on their own, you would not have to cover them. If they've not been sick or they have a family member that's sick, that would not apply. So there's conflicting things in different parts of this,
right.
And I think that may be where some of the confusion might come from.
Be sure to consult your HR. Get in touch with HR for health. Okay, if you've got an employee-related matter like that, does FMLA apply here? Does it not? Get with HR for health. They've got the answers. You can DM them on Facebook. They've got videos coming out.
Or if you have your own labor attorney that you use for other things. Anyway,
yeah, there you go.
I would strongly advise when it comes to those specific issues that you seek legal advice for those kinds.
Get with somebody who specializes in labor law.
Right.
Let's see here. Oh, and I would also add to that, if you are paying them through the PPP, okay, I would go back and watch the video Reagan and I did on maximizing productivity without production, where we cover all 5 business engines and all the things that you can be doing in the practice right now without seeing patients. There is a ton of stuff that you can be doing right now, whether you're getting into, virtual hygiene and teledentistry and you're filing those codes to generate some level of revenue, or you're not doing those things and you're really just, working on productive tasks within the practice. If I'm using the PPP to compensate employees, I would want them working on those things that benefit the practice and are moving the practice forward despite not having patients on payroll. Next question, just to clarify, once PPP money is funded, but the office is still closed, should we rehire everyone at full pay and take them off unemployment even though we aren't actually working? That is the intention of the PPP program.
That is the intention
of off of unemployment benefits, being paid through PPP. And again, if you are paying them through PPP, I would bring them in and have them working on all those productive tasks within the practice that are going to benefit, things like, scheduling the next 6 months Facebook posts, things like, business planning and strategic planning, ghost scheduling. There's a whole list. There's a video on our Facebook page. There's also one on our YouTube channel where Ray and I cover 150 different things that they can be doing. So there's a ton of stuff that can be done.
Yeah, and just let me say in regards to that too, it's a great time for the business owners to take a look at what they're spending their money on. And a lot of times we get so busy with the day-to-day operation of our businesses, we fail to look at some things. So spend some time looking at, what are you paying for? You may have some subscriptions on there that they're $10 a month, $20 a month. You kind of don't pay attention to that kind of thing, but look at those things and take some time to determine what you need to keep and what you can get rid of.
Yeah. And to answer this next question, I've heard that I've heard that once PPP is approved, you can defer receiving funds for a period of time. Is that correct? I don't know about deferring receiving the funds. I do know about deferring. You can defer payment 6 to 12 months. I don't know if you can put off getting the money.
You can.
Okay.
You can put off getting the money, as I understand it. And the importance of understanding the other side of that is you can defer the payments. The payments will not start becoming due. I've heard two numbers. I read one thing yesterday that said 6 months, another that said 12 months. I think it's going to be 12 months before any payment is required to be made on the PPP loan.
And no
And
interest
that's again,
deferred
it's
during that
not
period of time.
And no interest during that time. Also understand that under these 7A SBA loans, that you're immediately receiving no payments currently. If you already have an SBA loan, that you're not going to have to pay those for 6 months.
So then, Lee, just for clarification from John's earlier question. So what you're saying is if a client files for the PPP right now, but their state is mandated, they close until May 1st.
Mm-hmm.
Okay. They can defer taking the PPP money. So the 8-week countdown maybe doesn't start until May 1st.
Yeah, I believe that is correct, Reagan. I'm not 100% positive of that, but I believe that is correct. So
Okay.
that's the way I interpret it. Again, that's one of the things that we need a little more clarification on ourselves. But I know that you can defer the receipt of the money for a period of time.
Okay, perfect. And so again, this was all in the PPP. Now, can we move into the EIDL
Yes.
and
Sure.
talk specifically about the EIDL?
Sure.
Okay, so the EIDL and the PPP are two separate things.
Two different things.
Correct,
Absolutely.
two separate loans.
Yep.
The other thing is, and I've heard you can, and I've heard you can't, and then I heard you could, and then I heard no, you can't. So can businesses file
You covered
for
it all
both?
right there, Reagan.
Yeah. Can businesses file for both loans, or are they limited to only filing for one?
Okay, good question. And there's been a lot of confusion around how you apply for those too as well. So the PPP program, you can certainly apply for that, and that has not really become active and may not become active for application for another day or two. My understanding is everything that we've gotten now, and this is where we had some confusion over the weekend, is how do we apply for that? Well, for the PPP, you have to go through your bank if they're an approved SBA lender or any other approved SBA lender. So if you're not satisfied with your bank and you have another SBA lender out there, you can apply for the SBA PPP loan through them. The EIDL loan, the Emergency Economic Disaster Loan, has to be applied for through the SBA. And that website has been kind of crashing and going down and having some issues. That's where the $10,000 grant money is coming from, is from the EIDL loan. So you can get that. And that is an immediate grant. You can use that money for anything.
And I've read from I read through the SBA that they have been directed by the Fed to provide those funds within 3 days.
They are trying to do it very rapidly to get money into the hands of businesses. Exactly. So to keep them afloat and do that.
And a clarification,
money can be done for that.
Yeah, and a clarification, right now you cannot yet apply for the PPP, but you can pre-register.
That's correct.
Pre-register, they will update you daily, and when the application becomes live, they'll notify you, and at that point you can go in and apply for the PPP. In the interim, I would be getting with your CPA and your financial folks, and I would be gathering the financial information that you're going to need to provide when you apply for the PPP to make that process more efficient.
Exactly. And then I would suggest going ahead and having that discussion with your bank if they're an SBA approved lender, or finding another SBA approved lender that you can have that conversation with, so that you're ready to go with the PPP application ASAP when it comes live. And I think that's going to be tomorrow from what I understand. But at any rate, it'll be in the next 2 or 3 days in any case. So the cautionary thing there is you can't use the money from both programs to pay for the same expenses.
Mm-hmm.
So the EIDL loan would be for things that you might pay if you had outstanding lab bills in a dental practice, other expenses that you continue to go on. So you have for example, for paying a fortune management or your CPA or whatever, you can use the idle funds to continue to pay those kinds of things, and not the things that the PPP loan is designated for. So you wouldn't want to use the idle funds to pay payroll because that's covered under the PPP. You wouldn't want to
Plus,
use
it's
the
not
idle,
forgiven.
and it's not forgiven.
Yeah.
That's right.
So anything that you can get forgiven, yeah, anything that you can get forgiven, those qualified forgivable expenses, you want to pay through PPP because it's a grant, it's written off, it's
That's right.
forgiven.
No repayment.
If you pay those forgivable expenses through the money that you get on the idle loan, that's a loan. You're paying that on 3.75% for the next 30 years.
Yeah.
There are also no fees associated with that, so no prepayment penalties.
Correct.
So if you get a loan, you consolidate some debt, but you don't want to stretch it out for 30 years. There's no prepayment penalty. There's no SBA fee. Can we talk about the grant portion of the idle real quick? So when you get an automatic $10,000 grant just for applying for the idle loan, and that $10,000 grant is deducted from the qualified expenses paid for through the PPP. So if you have 50, so let's say you get a PPP grant for 50 grand and you have $50,000 worth of qualified expenses. And I also apply for the idle loan and I get the $10,000 grant. They've now given you $60,000 grant. You had $50,000 qualified expenses. You now have a loan under the PPP at 4% and on 10 years of $10,000.
I am not 100% sure on that, John.
Okay.
I did not read it that way. What I've read, the $10,000 under the idle is granted and given to you whether or not you're approved for anything else.
Okay.
So you could apply for the EIDL, get the $10,000, not get approved for the emergency injury disaster loan, still keep the $10,000 and it's forgiven as a grant, is what I understand.
Okay.
I've not read anything that to me tells me that the $10,000 has anything at all to do with the PPP. I could be wrong on that, could be mistaken, but I've not seen that at this point in time.
Okay.
So I guess my question then becomes, is the idle loan limited to $10,000?
No.
Or is it, and if it's not limited to the 10,000, but this would be a low interest loan that could be amortized over 10 to 30 years, whatever. But they could borrow enough to cover their entire overhead for a period of time if they can prove economic injury. Is that right?
That is correct. Now, the thing that the loan is limited to $2 million. The SBA will calculate the amount that they're going to qualify you for based on the information that you give to them. Here's one of the rubs that I have, and I do not have the answer to. I was looking for the answer to this prior to our starting the conversation this morning. So one of the questions on there is, what is your revenue? And the other question is, what is your cost of goods sold? Service businesses do not have cost of goods sold. I do not have cost of goods sold in my practice. The typical dentist does not. Now, you may have a few miscellaneous small items that you buy that you resell for certain things, but the typical service business does not have a cost of goods sold. So we've had a few questions about what do I put in this line. We're trying to get the answer for that we will supply once we receive that clarification. But cost of goods sold are for like a retail operation that has inventory. The items that they buy for inventory for resale would be their cost of goods sold. For a manufacturing company that manufactures whatever, all the raw materials that go into that would be part of their cost of goods sold calculation. But again, for a service business, you don't typically have a cost of goods sold.
Yeah, because I did a little research there because I had a question pop up on my end too, and according to dental economics, the cost of goods sold in a dental practice would be calculated by taking your lab expense plus your dental supplies plus any direct labor, which would be dental assistants.
And that could certainly be that. And we would say, and in some cases, that's the way we've seen things accounted for. Typically, on most dental chart of accounts, from an accounting standpoint, those things are not calculated as a part of cost of goods sold and reported that way on the tax return. So direct labor related to that, that certainly could be. And we need clarification on how to answer that question, because what the SBA is going to be doing as a part of these out loan applications is you are going to sign a form that says they can go out and acquire a copy of your tax return from the IRS for verification of your requirements there. And if that's not been reported that way on that, I don't know how that's going to impact the loan. So we're looking for clarification for that. But again, it's not unusual that a service type business would not have those things. And then I don't think there's any intention on the part of the law to discriminate against service industries versus industries that would have items for resale.
Yeah, and if you get it wrong, they'll basically just not give you. They'll just give you a lesser amount. Like if you put a cost of goods sold, if you put that amount of cost of goods sold in there, and let's say that they don't count dental assistant salaries as cost of goods sold, and that's just going to deflate the amount of money, not inflate the amount.
Yeah, and you're getting the dental assistant wages through the PPP, so you that's another one of those things you don't want to duplicate what you're getting the money for.
So then, can I ask this question, Lee? As an accountant who's been combing through all of this documentation, let's say one of our clients files for the PPP to cover their wages and interest and mortgages and all that kind of stuff for 2.5 months. Okay, yep. That's April through mid-June. And then simultaneously, they file for the economic injury loan, the EIDL. How much, if their standard operating expenses or standard overhead expenses are, let's say, $80,000 after payroll, mortgage, interest, all of that kind of stuff. So not including those expenses they're putting on the PPP. If their average overhead were $80,000, how much would you recommend they ask for in the EIDL?
From my understanding, you're not asking for anything. They're going to calculate based on the information that they have what they will allow you to have. It's not that you're asking for 300,000 and they're going to approve you for 80. You're going to provide them with the numbers, and they will calculate the amount under the economic disaster loan provisions that they will allow you to borrow.
Gotcha.
So it will be looked at on a case-by-case basis by the SBA and their underwriters as to what they will approve. So you're not applying for a specific amount.
Okay. You basically give them your tax returns, your P&Ls, your balance
Correct.
sheet, your payroll reports, and then they decide.
And they calculate it. That's correct.
Okay.
And they will approve it up to $2 million, which, that's a pretty good stretch, I think, for most dental practices beyond what you would get in the PPP.
Gotcha. And so would you advise your clients to apply for both or one or the other?
Right now we're saying apply for both.
Okay.
Get what you can while you can. The whole point of what's going on right now from a business standpoint is cash, conserving cash, doing the things that you can do to reduce the cash outflow, but yet doing the same things to take care of your employees, keep your team happy and so forth, that they will come back to work for you. And all these provisions of the laws and the requirements are to help you do that. So we would say get both. It's going to be interesting to see how this turns out. My gut feel is there will be more people that get the PPP than the EIDL. That's my personal position or feeling from what I've read and seen, but we'll see.
Okay, here's a question.
I have heard yesterday, I was on a call with an SBA lender, and I have understood that, to John's point earlier, that some of the folks that have applied for the EIDL have already received their $10,000. And that just started in the last, I guess, Fridays when it really started happening.
I think the big obstacle with the EIDL loan is and I spoke to my SBA lender directly, and she told me that because the SBA is backed up and backlogged with a lot of these requests, there's like a 2 to 3 month wait on the EIDL loan itself. You may get the grant, but there's like before you get funded, there's like a 2 to 3 month waiting period.
Yeah, yeah, on the DL. I think that's correct. Absolutely.
Okay.
The PPP is apparently going to be pushed through much quicker because it's to benefit the employee,
Right.
as well as the employer with the immediate continuing overhead expenses that you would have, rent and utilities.
Okay. So here's a question just came in via text. All the info that I've read says that self-employed individuals will be allowed to sign up for benefits. I'm assuming unemployment benefits, or at least try. And we addressed this earlier in the call. You can absolutely try, and those unemployment benefits are actually, I don't know. Can a 1099 individual? Well, actually, I wouldn't think so, because unemployment is something that is paid for by the employer for employees. So if you're the
right now, John, it's an unusual set of circumstances, and yes, the sole proprietor, which is what you are if you're on a 1099, can apply for them and will likely receive some benefit. And I know that's for a fact in the state of Georgia, and I think that's pretty much across the board with state unemployment right now, because the whole thing, and certainly under the loans for the PPP and all of that, it's covering what's also referred to as the gig economy stuff. So it's the Uber drivers and all those kind of people that have day-to-day tasks that they do, where they go out and they contract to do, maybe design a website for one guy one day, and the next day they're working on something else with an internet type thing.
Mm-hmm.
And they're totally self-employed, and they are eligible for these benefits as well. Probably a little harder for them to get it. It's going to take a little bit more reporting and maybe some additional information that they'll have to submit to get it, but they are eligible for both.
Okay.
And if I may ask one, and this may be more of a philosophical question, I don't know from an accounting standpoint, but with some of your clients who have enough liquidity, okay, they have enough liquidity to cover their overhead, cover, their home expenses, their personal expenses, so they have enough liquidity there. Would you still recommend they file for unemployment, or would you recommend that they look at the liquidity that they have as a means to ride the storm out?
That's a very good question. And what we've been told is typically you don't want to have a lot of unemployment claims against you as a business owner, because that hurts you on the back end. Your unemployment rate would go up. So in Georgia, the standard rate is 2.7%. As you have experience and you've paid money into the unemployment fund and you have no claims, that rate drops over a period of time. It can go down as low as 0.03%. So if you start having a bunch of claims against you as a business owner, that rate's going to turn around and go back up, because you've drawn on the funds that you've paid in. You don't have enough of a balance in your supposed account to cover the claims against your business. What we've been told here is that this is a unique situation. Just like people that are not paid into the unemployment are probably going to be eligible for some unemployment, the self-employed individual. What we've been told now is that this is not going to count against your unemployment rate. So this is an emergency situation to stimulate the economy. The federal government is stepping in and contributing funds to the state unemployment agencies to assist with this, and it won't count against you. So from that standpoint, if it doesn't count against you and you're not paying yourself to preserve that liquidity, because you've got ongoing things that you're going to have to pay, and we don't know how long this is, there's no guarantee that you'll get the economic disaster loan. There's no guarantee that you'll get the PPP. I think everybody will get that, but there's no guarantee. So you need to conserve that liquidity for those other types of things. I would certainly apply for it. I don't think it's going to hurt you in any way. The question might be, if you're taking capital out of your practice and you're drawing unemployment, how is that impacted? I don't know the answer to that yet. But as long as you're not paying yourself what you were paying yourself, you should qualify from what we see, just like any other employee would. But
And do,
again, you'd be limited in our state to the $930 would be the maximum amount. So about a little less than $4,000 a month that you would draw in unemployment.
and do they need, so if they do attempt to file, do they create a new account since the account they have now is as an employer? And how will getting insurance checks direct deposited into a checking account affect the benefit? I don't know that the direct deposit would have anything to do with the amount of benefit. I know it's capped at 900, 930.
Yeah, I'm not sure the revenue doesn't have anything to do with what you're paid as an employee. That's going into the business versus going to you personally. Now, if you were a sole proprietor, I guess that might have an impact from money coming in, but you'd still be eligible as a sole proprietor for the unemployment. Not real sure the question there, John.
Yeah. Do they need to set up a new account from as an employee? So when I attempt to file, do I create a new account since the account I currently have is as an employer? So do they need a separate account to file for unemployment?
No.
Okay.
It's not a separate account because the employer accounts are just that. They're employer accounts. That is not you. That is your company.
That's the
As an
EIN versus the social security number.
Exactly. So you're, as an employee, will also get assigned a login so that you can make certain designations. For example, if you can decide whether you want taxes withheld from your unemployment check or not. I'm recommending that you do because taxes bills still going to come due. That money is taxable as unemployment wages. So we would recommend that. You can also go in and at least in Georgia, I know you can go in and have that rather than receiving a check in the mail, you can go in and create your own employee account, log in, and you can have the money direct deposited to whatever account you want to have it deposited to.
Awesome. I think that was the direct deposit side of the question is, do I have it direct deposited into my business account? Do I have it direct deposited in my personal account?
That would go to your personal. The benefit would go to your personal account.
Okay, and so just to be clear, and again, sorry to keep repeating, it's just that it's just very muddy waters.
Sure.
And there's so much misinformation out there. And I know we still don't have all the answers, but just to be clear, the EIDL loan is directly through the SBA.
Correct.
They will determine how much you get.
That's
so
correct.
You don't ask for an amount for that loan. They basically look at your financials, tax returns, reporting, and they will determine what you qualify for.
Correct.
There will be a $10,000 as soon as the request is made. Within a few days, you will receive a $10,000 grant.
That's what I understand, yes.
Okay. With the PPP, they're basically taking the last 4 quarters, looking at the payroll, including bonuses, sick and vacation leave, and salaries for 4 quarters. They're going to take the two highest quarters or 2 highest months?
2 highest quarters. And they will
2 highest
that
quarters
Yep.
to get an average monthly. Average weekly. And then, but it's going to be the average payroll, or the average monthly payroll would be at a 2.5 multiple when they're applying for the PPP?
Yes, that's correct.
Okay. So then if our...
The way the law reads is it gives you 8 weeks of payroll plus 25%. So in essence, it's 10 weeks.
Gotcha. So in essence, if their average payroll plus mortgage, interest, utilities, those things, if their average is 100,000, they would basically ask for 250.
Yes.
Under the PPP.
Yeah.
Got it.
If that's weekly, it comes down to weekly, not to monthly. So that's a big number if it's weekly, $100,000. But It
I'll
can be
take
that.
that.
Well, so okay, so I'm curious then. Okay, so
Yeah.
if it is an average weekly amount
Mhm.
times 2.5,
Mhm.
wouldn't that only give them 2.5 weeks of payroll protection?
No, it's calculated at, I see where you're going. So it's calculated at the weekly average for 8 weeks is how the payroll piece of it is done. Plus you get 25% above that. So the utilities, the interest, the other things are calculated at 2.5 times. So it's a little bit of a, there's two calculations there as I understand it.
Okay, sorry, I got to jot this down. That's
I
a new
understand.
distinction.
I understand.
So 4 quarters payroll last year.
Mm-hmm.
We're going to look at the 2 highest quarters, get the average weekly payroll from our 2 highest quarters.
Let's back up. Now,
Okay.
that's the unemployment where they take the
Oh,
two
okay.
highest quarters.
Gotcha. Okay.
That's where the 2 highest quarters comes is on the unemployment calculation. The PPP is based on the average weekly amount over the last year.
Over the last year. Okay. Average weekly times 8 weeks.
Yep.
Plus
Plus,
utilities, more interest on mortgage,
yep.
interest on loans times 2.5.
Correct.
Okay. Everybody got that? Because I didn't.
Do you got that?
I figured since my blonde was going away, I might be getting smarter. I guess not.
I had hair before this thing started, man. You see what?
We know better than that, John.
All right. So I think are we prepared to move on from idle, expanded unemployment, and PPP? Because there's 2 tax relief programs that I want to touch base on real quick. Lee, you got time?
Yeah, absolutely.
Perfect. Can we talk about what do we need to know about the tax relief program, corporate tax relief program?
Well, there's certain provisions that are there, and there is one thing that you asked me about the other day that's kind of been clarified a little bit for me, and I think this is what you were talking about. There is improvement property that in 2018, prior to 2018, there's certain qualified improvement property that qualified to be 15-year property. And as such, you could take bonus depreciation and write off the entire amount of that. That went away. I think it was an unintentional loss of that deduction when the 2018 tax reform was passed. This law clarifies that and puts that back into place. So if you have improvement property that you've got into place, you can now take full advantage of that as an immediate write-off. That is one thing that's out there. The other provisions that are there in the law from a business standpoint, there will be some credits that can be applied if you have the economic stimulus or if you pay any money out for the extended FMLA stuff, you will get a credit against your payroll taxes for those funds that are being paid. I'm kind of thinking that's not going to apply to too many people, quite honestly. I mean, yes, the numbers are growing for people impacted by the coronavirus, but I don't know that it's going to impact a lot of people that have to pay out under the FMLA stuff. And for most of us as small businesses, there are waivers with under 50 that you can apply for, so you may not pay anything out in regards to that. But if you do pay it out, you will get a direct credit for that from the through your reduction in your payroll taxes that you're required to pay. There is also a part of this that says immediately any payroll taxes that you are required to pay, you can defer for the rest of 2020, and they will
That's the
come due in 2021 and 2022.
and 50% in 2021, 50%
That's correct.
in 2022.
That's
That's the
correct. So, yeah,
payroll relief program.
that's the payroll
Payroll
tax.
tax relief program. Okay, so
Yeah,
the
exactly.
so the corporate tax relief program and the payroll tax relief program, and then I think so on the payroll side of the equation, they're basically taking the payroll taxes, they're deferring that for this year.
For this year, the
For this year.
remainder of this year, yes.
Yep, and 50% of the payroll taxes that would have been due by December 31st, 2020, they're going to take that number, cut it in half. Half of it will be due at the end of 2021. The other half
Yep.
will be due at the end of 2022.
Yep, exactly. And there will be no interest and penalties accumulated on that. So, one of my concerns is, and I think I said this the other day in our meeting the other day, that one bothers me a little bit. The number one place I see employers get in trouble is with payroll taxes.
Mm-hmm.
You feel like I will advise my clients to go ahead and pay those if you have the liquidity to do it. If it becomes a significant liquidity issue, defer them, certainly. But I would prefer that those things get paid.
What if I buy a dental practice? Because one of the things we anticipate happening when we come out of this thing is there's going to be a lot of activity in the merger and acquisition space due to owners that just say, the hell with it, I'm tired of this. Not my practice. Let me do dentistry. Right. So there's going to be some of that. And, and I think, unfortunately, I think there are going to be some practices that this was the straw that broke the camel's back. And there's going to be some practices that close. Good news is we got a lot of entrepreneurial doctors out there that are going to want to buy these practices or merge these patient bases in. There's going to be an influx of quality personnel that are looking for private practice to join. There's going to be equipment liquidation, practices that are liquidating and they're selling off equipment and selling patient charts. There's going to be real estate that becomes available. If I buy a practice, when I buy that practice, do I get, and that practice has this payroll benefit that's been postponed. I guess that would stay with the, I guess that would stay with the original owner.
Yeah.
Okay, yeah.
You won't be able to buy the credits in essence.
Gotcha.
Well, you brought up a point when you start talking about people buying practices and so forth. So there's an issue, and I've had a few, and we have a mutual client that falls into this category. One of the things that I've had some questions about, and I got some clarification on that this morning, was what if I haven't been in business for 3 years or a year for them to calculate payroll for a year? How is that going to impact me getting money from the PPP, et cetera? So what I read this morning was that they will take the actual amount of money that you have paid over the period of time. So if you bought a practice you started a practice or bought a practice in November of last year, you basically through February, you were in business for 4 months. I guess that would be 16 or 17 weeks. They would take your payroll, divide it by the number of weeks you have been in business, multiply it by 52, and use that for the calculation for what you would be able to get. So that's some clarification that I certainly was interested in getting, and it would apply to somebody that has a new practice that they've only been an owner of a short period of time. So they would get the full amount to pay their employees under the PPP going forward. So what we weren't clear on last week is, hey, if I only had 3 months of payroll, that's not going to be very much money. It certainly wouldn't be enough to cover my employees for a very long period of time. But I did read some clarification on how that will be calculated for new businesses.
What if they've recently hired additional employees? And so like, let's say they hired 2 new employees in February, early in February.
Again, it'll just work under that calculation. It'll take their payroll for the number of weeks that they've been in business. It won't adjust it up. So they opened in, let's say, November, they had $1,000 a week for payroll. Then they hired somebody new in December, and that went up to $1,500. And so it'll just take whatever those numbers are and average them and do that. It won't take what you're doing right now today and do it. It's
And I
better
think,
than what we anticipated it being.
yeah,
So there is some help there for a new practice, but it's not going to be the perfect solution.
yeah. And I think there's a really good chance too that you're going to get more money through the PPP than you actually need. I think you're going to wind up with, you know, grant money sitting in that account that could be applied towards, you know, those expenses. But I don't think that you're going to need that full amount because that's for 2.5 months. You know, that would carry us all the way, you know, May, June, that'd be halfway through July, you know, or April, May, and then halfway through June. So I think I would say, I hate to speculate because then I open myself up to attack. But bottom line
Right. And
is,
we don't
I think,
know. And, you may not get funded for 2 or 3 weeks.
yeah,
That's the other thing, that we don't know yet. So that's when the time clock starts ticking on that 8 weeks. So we may be into July by the time you get funded and start doing that. So, yeah.
yeah, okay. But I think through the PPP and through the idle loan, deferring expenses and doing all that kind of stuff, I think the key here is to make it through this thing without it being, an insurmountable hole that you can't get out of, right? So I think that is, if you can make it through and not have, you know, liquidated all of your retirement or even any of your retirement for that matter. I think we're in a pretty good place. So I don't think it's going to be nearly, with the benefits and programs and things that the Fed's throwing out there with tax relief and with, you know, the PPP and with the idle loan and with the unemployment, with the $10,000 grant from the idle loan, payroll tax relief, corporate tax relief. I think we're going to be fine, man. I don't think.
Yeah. And you just mentioned another point that I think is worthwhile talking about, and that is receiving money from your retirement plans. There's some exceptions to law now that's been put into place with this as well.
Right.
So you can withdraw up to $100,000 from a retirement plan, defer the taxes on that currently under certain provisions, and not pay the penalty if you're under the age of 59 and a half, which is currently what's required. So if you get into a real severe liquidity issue personally or professionally, and you need funds to help keep the doors open, and you have available funds in your retirement plan, you can pull the $100,000 out, not pay taxes on it in 2020 as long as you repay that amount within 3 years. So that could provide some additional liquidity that we wouldn't have to pay taxes on. Now, the issue would be, you got to generate the money through your practice or through your business to repay that money as well. So, but it does give us an option if it comes to it for some practice owners.
Okay, good. Good information. Reagan, you got anything else?
I just have to say something because it's bugging me. But I definitely, if any of my clients are watching this, I see the stock market is about to hit its bottom if it hasn't already, and there's going to be opportunity to make a lot of money in your retirement after this. And so unless it is an absolute necessity, I would not touch your retirement. I wouldn't encourage anyone to touch what's currently in retirement. I mean, if you were riding the whole crash of the market when all this happened, you've already lost a ton. And some people don't have a whole lot of time to build that back. So yes, if you're in dire circumstances, you have to pay a medical bill and there's no way to get out of the hospital until you pay it. And that's the only place you have to access, then do it. But I would really look at all of the other options that are available before resorting to that one. And that is whether you're a team member, one of our clients, a multi-location owner, I would just proceed with caution.
I would agree with that totally, Reagan. I totally 100% agree with what you just said. That is just one of the provisions that's in the law. It is available if it's a last possible resource.
If you're going to
that's where it would come in.
Like if you've already fasted for 10 days and you are going to starve if you don't eat something.
Yeah.
Then okay. But I'd go to my mama's house and get some chili or something first.
I agree.
So I hate to run out, guys. I've got a call right on the hour. But Lee, I really appreciate you fielding these questions and kind of being our sounding board as all of the different pieces of information are coming in, and some of them agree, many of them disagree. They're just, we're almost drowning in information without any wisdom at this moment.
Starving
So
for knowledge.
I appreciate, yeah, starving for knowledge.
You know, and the precautionary thing to everybody is, you know, there's a lot to absorb in a very short period of time. As regulators get a hold of these things and they actually put the practical application to the law, some of what we think is going to happen may not be exactly what happens. I feel pretty good about what we've covered today is going to be the way it happens.
Yeah.
There may be a thing or two here or there that regulation changes how something is done. But we've certainly, I think, covered the intent of the law today, and hopefully it goes forward and we all have the answers that we need. I know that those things will be coming shortly, and there will be some clarification to some issues. Just again, as we said, over the weekend, it wasn't clear how to apply for the PPP. Now we're clear that that needs to be done through your individual banking relationship versus through the direct website, and the EIDL needs to be done directly through the site. So hopefully that helps everybody understand.
Well, before this is all said and done, we might be reaching out to you again if more details get rolled out, just to help
Absolutely.
us interpret it,
Absolutely.
us less educated and less knowledgeable
Right.
interpret it. But I appreciate your time, John. Thank you for setting this up, and everyone who's joined. Hope this answered more questions than it created. And we will continue to help you guys stay on top of this, keep a pulse on it, and we'll get you the details as they unfold. But thanks so much, Lee, and everybody. Thanks, John.
Thank you, Reagan.
And I do just a couple of final comments. Lee, I appreciate you so much, man. I definitely want to keep doing this. Maybe do kind of a weekly update. I've got a lot of my people are getting a lot of value out of this, and they're asking for it. So the goal behind these things is to obviously, as I interact with my clients and team members, we get questions, and then I don't always have the answer to those questions. And so I reach out to the experts that I know have the answers. And in order for everybody to be able to benefit from this is why we do these recordings. This is why we put it on Facebook Live, because there are people out there that we may not necessarily work with that have the same questions. And I don't want somebody to spend 3 hours sifting through information on Google when we can answer the question in 5 minutes. So that's the intention behind this, is to get the answers as efficiently as possible, for it to be as beneficial as possible, and get it out to as many people as possible, so that we have what we need to, to make progress. If you missed any of the components of this conversation, of this recording today, as soon as we conclude here, I'll be uploading the video onto our Facebook page at Fortune Management Mid-South. I'll also be uploading it onto my YouTube channel, so you can search John Harris, Jon Harris on YouTube. You can pull up my YouTube channel. It'll be uploaded there. And then any questions that you have beyond that, just feel free to DM myself or DM Lee, and we'll be happy to assist you. So Lee, thank you so much, sir. I appreciate it.
Thanks,
Sorry,
John. Appreciate you.
sorry we didn't get to do our quail hunt this past week.
I know.
But it got postponed, and we'll get it back on the schedule and get that taken care of.
Look forward to that.
All right, guys. Y'all have a great rest of your day.
Good day. Thanks.